Good evening, good morning all. Welcome to Auckland, New Zealand from the Black Bull Markets trading floor. Here on a very cold evening here in New Zealand, but markets certainly are not cold. They're heating up. We're seeing a lot of movement as of late, especially in the dollar. US indices are now starting to cool off, of course, following the Trump's recent comments about taking a perhaps more lighter approach on the trade tariffs with China. The US administration really is now getting a bit more behind Donald Trump's vetoes, as it were, and the markets are seeing to rally off of the back of that. You're getting a lot more investors, however, cautious about the actual impacts on the emerging markets themselves, and how much economically will these trade tariffs account for in terms of value of loss of trade. And ironically, we have US trade data out as well for the month of May. Normally, it is a minor event, but because of all the recent political trade talks, makes it rather more an important number. With over a third of the US tax cuts expected to be spent on imports, US policy is likely to widen the deficit over time. So key data to watch out for today. But one things that we really want to touch on before I get started on the charts is really what's happening in the Asian markets and the emerging markets, especially if we go to China now. There is a growing sense of unease in China, and especially in the Chinese financial markets. Shanghai Composite, the main stock index over there, has tumbled 20% in the last 5 months. The Chinese yuan is heading for its longest losing streak in 4 years. Corporate defaults are mounting. There are a lot of homegrown reasons for concern over there, and in timely fashion, of course, with Trump's proposed actionable rather trade tariffs. So the unpredictability of these trade wars with the US really giving investors a cause for concern, and perhaps being somewhat of a catalyst with all these reasons piling up for this sell that we're seeing in the market. So the fundamentals in China are very bad at the moment. Selling pressure is still very heavy, and there may be further root of that to come. The US, on the other hand, is somewhat more stable overnight, especially with US stocks taking a breather from a bit of a tumble following some significant earnings. So rebounding US stocks, oil over $70 as well, following reports of US allies halting imports of Iranian crude. So also, Trump got some backing from the Senate with regards to his travel ban. So the US has been bid over the last 24 to 48 hours of the whole, and the key assets we really want to look at, of course, a bit more closer to home here, is the Kiwi dollar. Now, if I turn your attention over to the chart here, we're seeing a significant move to the downside. This is a daily chart, but over the last 3 days, we've seen a bit of a tumble, but lower it down. If you'd followed the videos previously, we mentioned how the possible implications of these trade wars to impact Australia being such a close trading partner with China, and then as a domino effect, New Zealand being such a close trading partner with both Australia and China. So a lot of calls for the Aussie to fall to 70 cents, and therefore a lot of pressure has been placed on the Kiwi dollar. Now, if I take you to a weekly chart, you can see this significant line of support here around the 67 790 level, and if we look at this weekly bar that's formed over the last week, it is very bearish. Talking about a 112-point fall. In the last month, it's been almost 250 points, and that key support is only another 40 to 50 points away from the current level. So Kiwi dollar really not responding well also to negative business confidence news that came out yesterday. notably an underperformer in the FX markets there as well. Now, another key asset we're looking at is cable, of course. Cable coming under more pressure. This is again a daily chart on the back of Haskell's Monetary Policy Committee meeting yesterday. His testimony, rather, providing perhaps a bit more of a downbeat assessment of the UK's readiness to deal with higher interest rates as what we're seeing in the US. So again, this constant economic reality comes into play of interest rate divergence as the US begins to hike. The European Union stays the same, so you have a wider divergence, which is probably causing or due to cause these short-term leading to medium-term moves in the market. As well as that, the UK economy, of course, is still dealing with the fact of Brexit. I believe it's around 280 days now left to go. So if we're looking at support resistance levels on cable, seeing support coming around the 131 mark here. That is the low of the candle form. Seeing the lows of the candle form on the 21st of June, around the 131 mark. So key support level there. Again, if we switch over to a weekly chart, we can see that the trend is pretty bearish. We're now below the 50-day moving average line. We have been there for the last 3 weeks. We're getting a crossover as well on the daily chart. So room for concern potentially, but let's see if we can get a break clear and we can get a close below this 132 today, how far it can travel another 100 points lower remains to be seen. However, on the upside, we're looking at around 134.50 as the nearest resistance level. So pound still very bearish, not helped by the recent dollar bullishness or the UK government concerns, as well as the recent statement. Today we have, of course, Mark Carney speaking. I believe it will be around midday. He's due to speak on financial stability, possibly again touching on Haskell's comments from yesterday about possible interest rate rises. That's the key focus of that meeting. So keep your eyes on Kearney's meeting today, especially for where cable's concerned with. So key assets to watch: commodity-driven currencies, i.e., Aussie dollar, Kiwi dollar, as we mentioned earlier. Could we see further moves to the downside, especially as the trade wars continue? If you're keen on watching Chinese indices, have a look at those. Of course, gold as well, which recently had a crossover between its 200-day moving average and its 50-day moving average, seeing room for downside on all these assets, and the dollar still remains the bull of the story. Well, we really appreciate your time watching this, and for always, if you have any questions, please let us know. For more great videos like this, please subscribe on the buttons below. Thank you for your time. Good luck with your trading.